Welcome everyone, welcome to Bitcoin and the banking crisis. We've had what a year in US banking, of course, and what we're going to talk about to get going here is really the contrast that we've seen from Bitcoin industry players, Bitcoin products, and what we've seen in the actual banking sector and all of the bankruptcies and all that kind of stuff. So the first question I have along the lines of that, everything to do with this crisis, is really about the reputation of US commercial banks, globally, domestically. What's gone on with this reputation? How much has it changed from what we saw in '08 with the crisis then to what we're seeing this year? So it's really about the reputation of US commercial banks. So Mike, I'll start with you.
I think it's undeniable that this year has been pivotal in terms of the reputation of the banks. So we saw that the risk management inside of these firms is not as professional as you think it is. So, I mean, at the end of the day, I think banks have one job. I give you the money, I come back later, you give it back to me. It's as simple as that, right? And here we have a situation where, they're managing how to make a profit, and so they're trying to put that money to work. We think of banks as depositories, as lending institutions that distribute money out through our communities and help make small business happen and all that. No, turns out we printed a lot of money, they didn't have enough loan demand, so instead they park it into these long-term T-bills. And then everybody knows eventually the interest rates are going to go up. What's going to happen when this occurs? And somehow they got on the wrong side of this. So all of a sudden the reputation is really tainted, right? We expect that these banks, the bedrock of our financial system, are safe places for consumers, for businesses alike. We saw in Silicon Valley, all these investors, they give money to small companies to go make things happen. They might get a check for 20 million or 25. They say, founders, your job is to go operate your business. Your job is not to invest this. Your job is to put it in the bank and go operate. And so we depended on those banks to take good care of that money. And it turns out they're not as good of a steward as we'd think. So big reputational damage.
One thing that you made me think of, and this will be a question for you, David, when you talked, indeed, interest rate risk is sort of banking 101, kind of forgotten about over years. But one of the things we've seen for the past, let's say, 30 years, this was a historical anomaly where the best and brightest for an entire generation went to Wall Street, worked for banks. Now, one thing we noticed that when Kraken and other Bitcoin institutions began and started hiring, we really saw a massive human capital drain out of the system. And I'll say that, people who have been in the Bitcoin space, we've seen some of the most talented people because there was real risk, there was real trading. It wasn't all backstopped by what was going on Wall Street. I've often called it because they de-risked Wall Street with the bailouts in '08, sort of like making it porno. It's not real. There's no more real risk, right? Now, what you guys have got, tons of talent. The best and brightest have really gone into a place like Kraken where they've been known to hire these top people. Do you see that? Do you think it is one of those cases where we didn't notice that the best and brightest left Wall Street and have already joined some of the institutions like Kraken? Is that something you've seen with all the hiring you guys have done and that kind of stuff?
Yeah, there's probably an aspect of that. I definitely agree with Mike on the transparency that's now out there among a lot of people on kind of how the financial system works and some of the implications of these challenges. It's frankly what us Bitcoiners here have always known about what could happen. And all of a sudden, the events that we knew would always be possible, they happen. And so a lot of these things are kind of like laid out in plain sight in front of everybody, and they're like, wow, okay, banks can actually fail. And in what happens when they do fail? Where does the backstop come from? Where does the protection come from? The FDIC, oh wait, no, that actually doesn't really cover all the deposits, and they really only have a couple % coverage on your funds anyways, and on down the line. And all of these things that we've talked about and that we knew about even before, true Bitcoin, even before Bitcoin existed, now are becoming more and more transparent and known to everybody. And I think, sorry to bring it back to your point around talent, I think, you probably see a variety. Wall Street, we're talking about, tens, hundreds of thousands, millions even, different individuals working in the space. And, all different walks, different perspectives, different motivations, and I think for sure, I mean, there are some talented individuals out there that understand all the fundamental principles, you know, at a first principles basis of, you know, financial services and finance and interest rates and risk and all these different pieces. And some of them actually are kind of, you know, in some ways true individuals that kind of like adhere to the true ideals of Bitcoin and crypto and are attracted to it. And that's kind of like that Venn diagram of folks that I think have come to join Kraken, you know, the handful that we have at the company.
So, you know, a lot of this reputation decreasing, let's say, also has a correlated aspect to it, because the power of the US regulatory system was really predicated on the reputation of US banking system being the best in the world. Now, the idea of power and reputation being connected in this way, with the reputation going down, we have seen, I think, a diminishment in the power of the US regulatory state. They're doing stuff, but you're starting to see people say, well, I got options. There's other things I can do. So, Mike, is that something that rings true to you? Do you see now that the power, you know, when Alan Greenspan spoke at the Fed years ago, the world stopped. We all listened. When Jerome Powell gets up there now, we're saying, like, look at him twitch. Why is he so weird? Why is he acting like that?
Well, look, I think it's history of mankind that power and money go together. And those of us, and I think many of the people here have been in the Bitcoin space, you know, 10 years now. And a lot of what attracts us to the space is the idea that, hey, wait a minute, the power has shifted a little bit far away from the people. That isn't actually what we wanted. And Bitcoin looks like an opportunity to say, how do we rebuild that? Back to the personnel question a moment ago, I think the folks on Wall Street, you know, they're supposed to manage money, but they don't actually produce anything. And what's happening in the crypto tech sector is we're actually building new products and bringing new people and putting everybody on the same, you know, kind of same transparent playing field. So the people that know how to build and put systems together are the people that know how to do that. And that's why we see technology coming in. And then I think most people, this rabbit hole we go down to, we realize, wow, there's a lot of messy stuff that was invented, you know, 50, 60 years ago with how we do our current money system. And that can be done a lot better. And we're definitely not happy with the balance of power as a people. So yes, the dollar is weakening. Of course, that weakens the power that goes along with that money.
But even, you know, the idea of like a contrasting business model, let's say, is starting to become obvious. You know, running a fractional reserve system where it's all maturity transformation of loans to people. They're basically, they've got like a subscription base of mortgage holders at this point. Like that's the you know, on the retail side of banking, right? They have this.
You know, like with banks, this idea of, you know, regional banks providing lending in their space. Okay, it used to be like we didn't have the internet. We couldn't communicate across the nation instantly. Now we can. You get a mortgage today, the ink's not even dry before that mortgage has been packaged up, sold to somebody else. It's getting repackaged into a security of all kinds, right? You know, this idea, do we need regional banks to do lending? Maybe that's historic, right? Is it really what we need? You can get on the internet, you can get a loan all over the place. You can get it from abroad. You don't need it necessarily. And then, so on the lending side, I'm not sure the premise of what banks used to do in terms of being lenders is actually as neat as it used to be. And then second, keep the money safe. And you know, they used to give you a yield by way of lending it out. As a result of the monetary policy from the Fed, that went down to zero. So now you're just giving an unsecured loan to this bank and trusting them that they're going to do something responsible with it. And now it's been revealed that responsibility was breached.
So we definitely saw Bitcoin react price-wise, but I wonder if this sort of you know, activity around reputation and the contrast with business models, have you seen that as an opportunity where people come in and you now see a clear avenue to grow your business simply because of the contrast of the bank system failing and what we're offering seemingly more confidence despite the troubles on the other side? Is that something you've perceived in the company? Do you see that, you know, up and down? Do you see new customers coming in with new stories, new origin stories of people joining, and I don't mean professionally, joining as customers of your service?
Yeah, for sure. So I mean, I think there's a very kind of like recent near-term you know, story around this, and then there's kind of the long-term one that we've already talked about. The recent and near-term story is Kraken's a bridge from, this legacy system to the new system, right? And, when these various banks, rumors started, some of these banks, of course, were banks that crypto investors, funds, and so forth were using. They questioned the safety of their U.S. dollars. They questioned the safety of the banks that they were using, and in some instances, they may have went from a case where they, had a bank or several banks, and they got down to a situation where they had just one, as opposed to many, or even zero. And what happened? Many of these individuals, businesses, what have you, Kraken clients, they rotated away from U.S. dollars into Bitcoin. And stable coins to some extent, which is a little bit of a different dynamic. And so we actually saw that in the near term when the more recent kind of spate of different bank shutdowns, failures, depending on which one we're talking about, happened. So we actually saw it in a very isolated near-term aspect, this rotation among our client base out of fiat, out of U.S. dollars. But it's really a microcosm of this long-term transition that as individuals kind of see the contrast between the two different systems. You have the system with, kind of the uncertain set of rules, changes in monetary policy, changes in the supply of this particular currency, the U.S. dollar, changes in rules on who can transact, whether that's sanctions or whatever else. And then you see Bitcoin, which is much more deterministic, at least to date, in terms of supply, in terms of ability to transact all these different types of things. That contrast, and the inevitable kind of realization among many people that hey, this other system has a lot of clear benefits.
Now, the system certainly has those benefits, like you said, right? You can see the contrast, but I'll go back to the predictability part for a second, right? So Bitcoiners have predicted the world we're in now for years. We predicted the banking thing years ago. If you go back to the repo rumble in 2019, we were laughed at for saying, oh, well, it's either going to continue with this overnight repo market and you're going to have a massive print. We didn't know anything about COVID, but the print happened, right? We saw it all happen. So, we've been predicting things pretty accurately for over 10 years now. But at the same time, if you go back to these business models, we haven't been able to have a predictable partner as an industry when it comes to negotiating the legal regimes that we can operate in and create products in and things like that. I'm reminded of the OCC guidance in 2020 for custodians like yourself, where they said, actually, this is basically an ancient practice of banks. You can do it, don't worry about it, right? And this is in 2020. And within months, you got rug pulled. Actually, you need a whole new set of rules. We got to create a codified system just for you. So we're dealing with being the right predictors of the environment, yet having no predictable partner when it comes to regulatory things. So how frustrating has that been for you to operate in that environment? No predictability when all your predictions are right.
Well, look, I think some of that is fair, but I think we should also be fair to those that are new to technology. We have completely upended the way to think about money. And so it's natural that it's going to take a lot of education to make that work. We have now completely upended the way these systems can come together. You go and ask executives at Goldman Sachs or JP Morgan, what would be an ideal market structure for trading systems, banks, et cetera. And they can't tell you. They don't think that way. They know very well how the existing system works. It's the rules of the road, but they don't think about how do you change the rules to make it be better. They're just not that type of person. They don't have that power anyway. So yes, it's very frustrating that we don't have just a clear, clean road, but we shouldn't be surprised because power and money overlap. We shouldn't be surprised because it actually is technologically upending. We shouldn't be surprised because neither the regulators, the legislators, or the existing Wall Street incumbents are very good at building systems. So anyway, we shouldn't be surprised. It can take a long time.
They're not systems thinkers, is what you're saying.
Definitely not.
Yeah. Okay. So, but at the same time, the products that Kraken, for example, has tried to bring to market, through the SPDI, for example. So the whole idea of not having a creditor-debtor relationship when you make deposits into a bank. So the whole point of the SPDI is that you can hold things in bailment, which is exactly how the repo market works, right? The Fed, when it deals with the commercial banks is actually using the bailment structure because they don't want to create a debtor-creditor relationship with overnight lending and want to be able to have free and clear, unencumbered assets going between the two. And now, you build this product, which in combination with proof of reserves, which would be an amazing thing, put those together, and you would have probably a product that would solve most of the problems that people have with risk of a bank and worrying about a bank crisis. Yep. But in your case, you had the thing done. You did everything right, and you didn't get the predictable outcome that it looked like you'd earned. So yep. In your case, you have a whole set of different frustrations.
Yeah. Yeah, I mean, I think the frustrations you're referring to are basically the Fed and the master count and the ability to, have this thing granted and so forth. And yes, that's been like an ongoing ordeal. I think I'll leave it to Caitlin to tell that story. She could tell it. You tell it quite well. But I mean, I think we're focusing now, with the SPDI, not on the fiat side, which we were previously, and focusing strictly more so on the crypto side with that entity and business, which we're looking to launch in the coming months here. We're focusing strictly on the crypto side. It goes a little bit to the piece on bailment, but I would say some of the aspects that we just really find attractive about it is, a regulator that is really leaning into crypto and is very much interested in learning about crypto. They passed a handful of specific laws related to Bitcoin and crypto with regard to forks, airdrops, these types of things. And so those aspects we think are particularly interesting. Frankly, just the kind of warmness around Bitcoin and crypto, just from a kind of a baseline standpoint. And then some of these other specific things we think might be interesting and so forth. Yeah, I mean I know there's different structures on the bailment piece, but it's not like the most critical aspect, I guess, for us.
Mm-hmm. Yeah. What about proof of reserves?
What about it?
As far as an interesting product that can help.
Yeah, so proof of reserves, and by the way, Kraken is, I think, probably leading maybe better than anybody on this, so good job. So proof of reserves first came out as a concept, 2014, 15, kind of after the Mt. Gox episodes. The great thing is when you have the digital assets and when you hold in 100% reserve, you can do proof of reserves. It doesn't work with a fractional system. Mm-hmm. It doesn't work with a fiat system where you can't see it on chain. So, obviously what we're building here is trying to be more transparent so that you can identify risk, you can identify fraud and failures. Proof of reserves will help tremendously with that. It's probably more important than the bailment thing that you're talking about. Mm-hmm. What's happening in our industry? Do we have a case where, you put it into a 100% reserve bank or qualified custodian where you've got it bankruptcy remote and then suddenly the courts are pulling it away from you? No. Segregated accounts are bankruptcy remote. That's always been true. There's zero examples of any custodian in the US ever where client funds are taken and given to somebody else. So that doesn't happen. But the rug pull? Well, that's been happening a lot, right? So anyway, I think the proof of reserves is far more important. Yeah. But market structure is coming together, and every regulator, Wyoming or whatnot, that puts something specific forward for how crypto should engage is always good. Always good.
Now, sorry.
Yeah, on proof of reserves, I mean, it is a positive step, to do these types of things, to add transparency and so forth. But we're the first to say they're not perfect. There's still the proof of reserves that we have. There's still an auditor involved, a third-party auditor, which is a positive as opposed to not using an auditor at all, which is what we see, from many of the others, out there claiming proof of reserves. And so there's still a number of different things there. You still have to have some type of process. Are you really identifying all of the liabilities out there? That these assets need to back all of the customer claims and what have you. So, while challenges, I mean, I think all of these steps towards more and more transparency are what we should be doing in the space of this kind of mushy middle of hey, there's crypto, Bitcoin, non-custodial. That's the ideal. That's where we want everyone to eventually be. But custodians are going to serve a purpose, for some time and maybe for a long time, as we kind of do this, long transition from one system to the next.
And even the idea of proof of reserves as part of a system, and people understanding that the system is changing a lot, like what you were saying, right? We're looking at systems here, not the goals of Wall Street or whatever. The systems that we use to transact, to make commercial relationships, to form these commercial relationships that can move the world forward with all kinds of inventions and stuff like that. So, as someone who's more from the tech side, as an engineer, having to deal with financial engineers for a long time, do you see actual engineering literacy, let's say, because of Bitcoin entering the fray more, and people who are working in the financial engineering side now opening their eyes to this sort of tech, the real engineering side of things?
Well, I mean, look at proof of work, right? There's been a tremendous amount of debate around, what is proof of work, and it's environmentally bad, and I guess it's more coming from the political side of really having a hard time understanding it. We gave it names like mining, which connotes other things, so there's a lot of confusion there. But coming back to like trading and markets, right? So if you look at I'll call it the legacy equities markets, right? You'll find a series of brokers, you'll find exchanges, you'll find clearinghouses. These were designed to help people trade fast. Now, we do need, by the way, lots of liquidity in any market. We need that whether it's a Bitcoin market or anything else. But do we need clearinghouses the way we had them in the past? Well, we have technology that can come in and solve these problems. So this idea of like atomically moving the money in the TradFi world, they call this DVP, right? Delivers payment. But we can build systems that handle that perfectly, and the technology disallows the edge case of anybody failing on their
like
leg.
a velocity of money situation, where it's going to the real economy and not the scalped economy of let me get a bit off the top and all that stuff.
Well, that gets into the higher levels. No, I'm talking about just like how do you clear trades? Like you do all this trading back and forth and then clear it. And then there's manual systems that deal with that, and it's not guaranteed. So somebody has to be a fiduciary, and if somebody doesn't show up with their money, he has to step in and backstop it. With crypto, we can get rid of that entirely. And it's just two people trading, and the money's either going to swap or it's not.
P2P.
Yeah. So, look, we can build much better markets than what we had, but the people that are running the legislative and regulatory bodies today don't really understand why we have the market structure we have, and they certainly don't understand the possible of what technology can do tomorrow. And here we're just talking about trading in markets kind of on the level 1 spot markets, but there's a lot more kind of beyond it.
So, and you made a good point just about the predictability of these systems, but also just, here we are. We can predict where this is headed. So, David, where do you think we're headed with this bank crisis in the next few months, few years, and we'll lead out with that?
Yeah, it's an interesting time, interesting place for, I guess, the Fed and these banks to be. You have this dynamic where it's a rock and a hard place, right? You have looking at more bank failures on one side or inflation on the other side, and I don't know how they're going to be able to thread the needle, frankly. We'll have to see. But fortunately for us, we don't need to really think too hard about it because we have Bitcoin as our path.
That's the good news. What about you, Mike? A couple of predictions here.
Well, I'll try to be optimistic about it. This has become too political. I hope everybody here can help kind of bring this away from politics, because frankly this is about money. And if we turn it away from I'm pro Bitcoin or I'm pro power or whatever, and instead say I'm pro human rights, and I care about people having the right to receive money, save money, and later spend it on whatever they want. If we make that happen, I think Democrats should love it, Republicans, Libertarians should love it. Like, focus on that, help the politicians disarm that this is a political issue. It's not. It's a human issue. And I think that would be a great outcome.
The Bitcoin golden era is coming, everyone. Give them a round of applause. Thanks.
Thank you.
Great, guys.
Welcome back. I'm Pete Rizzo, editor at Bitcoin Magazine. We're here at the Bitcoin Magazine live desk presented by Marathon, and it's Industry Day at Bitcoin 2023. Joined once again by special guests Optimist Fields, host of Simply Bitcoin, Walker America, one half of the crypto couple on Twitter and TikTok, and Guy Swan, last but not least, host of Bitcoin Audible. Guys, we just heard about Bitcoin and the banking crisis. Dave Ripley, CEO of Kraken, Mike Belshe, CEO at BitGo, talking about the cracks in the system that have formed. What's happening here, and why should people be paying attention to this banking crisis if they're not? Guy, will send it to you.
Man, the situation is so bad. Like, banks have just become, fundamentally, they've just become integrity marketers for a system-wide insolvency. They're essentially there to look big and legitimate as PR for the Ponzi scheme. And I think we're just kind of like, we're rearranging decks. I mean, we're rearranging chairs on the Titanic.
But the average person doesn't seem to be connecting the dots. Walker, why is this at? Why?
Well, I think that the average person also can feel that everything is breaking. You out there, you can feel that things are not as they should be.
Right.
And you know that
there's a disturbance in the force.
Yeah, and all they can do is keep lying to you, right? All we must do as Bitcoiners is tell the truth. So it just comes down to trust, right? Do you trust your government? Do you trust your regulators? Do you trust your bank? Or are you going to trust yourself, your own eyes and ears, and what you are actually seeing happening all around you?
Opti, your take.
Yeah, 100%. I mean, I came through the financial world through Bitcoin, and I've never felt safer in my life than right now, just like having everything in Bitcoin. And I ask myself one question all the time: wait, you guys still have money in the bank? Like, what is going on? Can't you see what I see? And I mean, banks are insolvent by design. They gambled your savings and they got exposed. And I think we're all seeing this happen. And who called it out first? All the Bitcoiners on Twitter. All of our friends are like, we've been telling you this for a decade now, and still people just aren't awake. And hopefully people are waking up to this. It's like Walker said, I think people are feeling the pain, and they're slowly going to come to Bitcoin as a safe haven asset. We're just not there yet. It's a process.
It's like a spectator sport.
Well, Bitcoin price now, 27,000. I think people are wondering also, have been hearing this rhetoric from Bitcoin of the bank failures. Why is it not driving adoption to Bitcoin?
When shit breaks, people go to safe. And for people who aren't already familiar with Bitcoin, Bitcoin isn't safe to them. Like, they're just trying to figure out how to get money out of the bank or hold cash or gold or whatever it is, go to traditional. But the people who are in Bitcoin and are familiar with it, I think when the banks crash, they do buy more. They're like, okay, I should have had more there. So I think it drives the conviction rather than and just being like another touch point for people who are unfamiliar with it. Or
is it messaging? Is it lack of awareness? Is there something we can do, Walker?
I think that there's also just it's difficult for us to figure out the future when we're so stuck in the current system. I'm speaking about people who are coming to Bitcoin. Now, if you are not familiar with the idea of having self-custody of your wealth, there's no way for you to do that with the U.S. dollar, with any fiat currency. You can, if you have cash, yes.
Dollars under a mattress.
Yeah, literally dollars under a mattress. But then that is
$3 trillion.
Yeah, but you cannot send that to the other side of the globe instantly at the speed of light for fractions of a penny. Bitcoin is a completely paradigm-shifting monetary technology. It changes the game, and people are not yet ready. Many, we all here are, of course, many watching, but many are just not ready for the idea that I can actually have physical custody of my wealth, and I can send it around at any time, and no one can stop me.
Well, we were talking about the problems with crypto custodians and Bitcoin custodians. We're going to hear about this in the afternoon. There's going to be a lot of content on Sam Bankman-Fried, FTX. We were talking backstage about the controversies, even at the hardware wallet level. Custody, maybe not a solved problem. Up to your take.
Yeah, I mean, I think it really is just a paradigm shift. Like we're saying, most people are so used to having someone else hold their money. And I know for us, like, we're digitally native, well, mostly digitally native, and for us, it's just second nature. It's like, yeah, of course I'm going to take my money, put it on a hardware wallet, just take self-custody of my Bitcoin because I'd rather trust myself with my money than someone else. And in the traditional world, like my parents out there and, people of that age, they're just so used to outsourcing their responsibility to someone that it seems like such a huge mental leap to just be like, wait, I have to take my own money, and if I mess up, it's completely gone. Like, wait, hold on. Like, let me slow this down.
It's a degree of responsibility that most people. We live in the era of everybody else is responsible. I'm responsible for nothing. I'm just owed everything. And so when you give somebody that responsibility over their funds and over their life, not only is it profoundly uncomfortable for a lot of people, but it's also a kind of revolutionary act from an individual perspective.
Just one of the challenges that we're working on today, and you'll be hearing more from the builders working on the main stage. We're live at Bitcoin 2023. Smash that like button. We'll see you after the break.